Hi there traders, and welcome to this week's edition of the Keyzone Traders Trade of the Week. Now this week we're going to look at a trade that we took on the FTSE earlier on in the week. It's a day trading strategy that we use, and it's actually taken advantage of something that a lot of retail traders fall into the trap of and actually make losses on. But we actually use the information, we use this repeated market behavior to actually profit from the market. So if you ever get just triggered into a trade only for the market to reverse and take out your stop, or your stop just gets clipped only for the market to reverse and go straight to your target, then this video is going to give you some vital information to help with your trading. Hi there traders, so welcome to this week's edition of the Keyzone Traders Trade of the Week. Now, as mentioned in the intro, we're going to look at something that a lot of retail traders get trapped out on, and they actually get either stopped out on or they get entered into the market on. It's actually something that happens very regularly in the markets. Now, as you can see from here, we have this line here, this purple line is relevant because this is the lowest point traded in the pre-market session from 1 o'clock in the morning. So the market shut at 9 o'clock when the American market shut. The futures market actually go till 10 o'clock, I believe. But they open again at 1 o'clock in the morning. So from 1 o'clock in the morning until 8 o'clock in the morning, we take the lowest point. And if you actually look at this action here in the overnight session, we've sort of developed a bit of a range. You can see the price action is very choppy. We have a top of a range here and we have the low of the range here. Now that's relevant because what generally speaking happens is people who think the market's going to go up for that particular day, they will get long and they will place their stop below that range, below that low. They also will be people that will be looking to short a breakout of the range, and they will be looking to sell any break of that the bottom of that range. Now what happens then is the market goes for this liquidity because it knows it's there. So what it wants to do is it wants to grab that liquidity because a market's function is to create trades and facilitate trades in the market. So quite often what happens is we get this open, the market pushes down, it stops people out who are long, it enters people who want to get short, and then it will reverse strongly like this. Now we know this happens, we understand why it happens, and we therefore can use it to our advantage. So this happened on Tuesday. It's quite a quiet week this week. Last week we had a lot of news, we had a lot of rate announcements out. Australia, Bank of England, the Fed, they all released their announcements, rate announcements, and we also had NFP on Friday. This week was much quieter. We had CPI figures on Thursday and it was Veterans Day in the US on Friday, but generally speaking the market was much more settled in the markets in general. So what we look to do is we look to take advantage of this liquidity grab, and we actually get long. Once we see that strong close back up, we look to get long above that candle with a stop below the lows of the false break. And we can then target up towards this next minor zone. You can see it's quite a nice risk to reward trade. 1 to 1 takes us just below that next minor zone. We actually had identified this area at 72.58 to 72.66 as a initial support zone in our daily trade plans that we give out as part of our Keyzone service as well. So we gave that information out before the market opens to our clients, so that they knew that we could look for potential area, this to be a potential area of support. So we had that, we had the liquidity grab, we had the reversal, we had the false break. All of this was going for this trade, and then we entered, and as you can see, it took a little bit of time, but it eventually came up and it hit our full target here for a 1-to-1 risk to reward winning trade. So this is one of the market behaviours that we teach in our Keyzone Traders Academy. As I say, a lot of retail traders fall trapped to these market behaviours, but if we actually understand what is happening and why it's happening, we can actually use that information to our advantage to actually take advantage and profit from these market behaviours rather than actually get trapped and become victim to them. So if you want to learn more, I'll put a link to our Keyzone Traders Academy in the box below on our YouTube channel and on our social media channels. If you want to find out more, please let me know, and I'd be happy to give you some more information. It's a really extensive online course where we talk about the market, why the market behaves the way it does. We offer strategies, we talk about risk, we actually do have a whole section focused on mindset as well, and improving your mindset as a trader. So if it's something you'd like to know more about, please let me know. Other than that, I hope you're finding these videos really useful. Please let me know how you're getting on with them, and if they're adding value to your trading or being informative. I hope you've had a great week trading. I hope you're having a great weekend, and I'll speak to you soon. Cheers.